For years, crypto has been on the outside looking in, knocking on the impenetrable walls of legacy finance. This week, we didn't just find a crack in the wall, we became the Trojan Horse they willingly pulled inside. And now, billions of their dollars are flooding into our ecosystem, not on their old rules, but on the new rules being written by this technology. It's just after 5 a.m. here in Miami Beach on Friday, August 8th. And the institutional invasion isn't a prediction anymore, it's happening right now. And I'm going to show you exactly how the soldiers just stormed out of the gates and what it means for your portfolio. The first soldiers out of the horse weren't from Wall Street. They were public companies who have now sworn allegiance to a new network state. We saw Fundamental Global, a NASDAQ company, file to raise a stunning $5 billion with the sole purpose of buying, staking, and deploying Ethereum and DeFi. This isn't just an investment, it's a strategic pivot. They are turning their corporate treasury into an active, yield-generating participant in the Ethereum economy, and they are not alone. With FG Nexus and SharpLink Gaming following suit, the total value held by these new corporate ETH treasuries is now approaching $12 billion. This is the first wave. Public companies are no longer just holding the asset, they are becoming the asset. Their destinies now tied to the success of the Ethereum network. The next phase of any invasion is to build infrastructure. And this week, the biggest general in the financial army, BlackRock, began construction. They launched their first tokenized fund, BUIDL, directly on the Ethereum blockchain. This is a profound shift. The world's largest asset manager is now using a public permissionless network as the core plumbing for a traditional financial product. They're not just buying crypto, they are validating the network security and efficiency at the highest level. The soldiers are no longer just inside the walls, they are building their own fortresses with blockchain technology. The final stage of this takeover is to integrate into the core systems of wealth and power. That happened on two fronts this week. First, the executive order greenlighting cryptocurrency in 401k retirement plans. This embeds crypto directly into the fabric of American long-term wealth, unlocking a potential torrent of trillions of dollars over the next decade. In the vehicle for that capital, that pathway was cleared by Grayscale's major legal victory, which all guarantees a spot Ethereum ETF. This is the easy one-click regulated button that will allow all that retirement money to flow seamlessly into the ecosystem. The invasion is now reaching the heart of the empire. So the soldiers are out of the horse. How did the market react to this invasion? Exactly as you'd expect, with force. Bitcoin immediately reclaimed 117,000. Ethereum rallied hard. The total crypto market cap surged towards 4 trillion, and this isn't just price action, it's backed by real flows. We saw over 2.4 billion flow into institutional crypto holdings in July alone. This is confirmation, but as a trader, you want to know what's next. First, for Bitcoin, this news establishes a powerful new psychological floor. The narrative has shifted from a speculative bet to a core holding for the world's biggest funds. In the short term, Bitcoin is trading in a tight range, but a clean break above this 117,000 level opens the door to the psychological targets of 120,000 to 140,000. Watch for consolidation above these levels as a sign of strength before the next major leg. For Ethereum, this week was a fundamental game changer. It was validated as a treasury asset, as financial rails by BlackRock, and as a mainstream invest through the ETF pathway. So what's the trade? Keep a close eye on the ETH BTC ratio. This wave of ETH specific news could signal a period of sustained Ethereum outperformance. Furthermore, as institutional activity congests the main chain, value will inevitably be pushed to L2s. That's where the next high beta opportunities could lie. And for the broader altcoin market, a rising tide of institutional capital lifts all quality boats. With Solana consolidating near the $200 barrier, it stands as a logical next stop for capital seeking growth. More importantly, watch the narratives born from the news. The BlackRock announcement has put a massive spotlight on RWA tokenization. This is where you can find alpha by getting ahead of the next wave of institutional interest. Finally, layer all of this on top of the macro environment. With the Fed signaling a probable rate cut in September, you have a perfect storm. You have massive, newly unlocked demand meeting a market environment of easier money. That is rocket fuel. The Trojan Horse wasn't a surrender offering, it was a delivery system. The invasion isn't about destruction, it's about a hostile takeover of outdated systems replaced by something far more efficient. The implications are clear. A less volatile, more liquid, and deeply integrated digital asset class is emerging from the chaos. The foundation has been laid by corporations, the rails have been built by Wall Street's biggest players, and the floodgates have been opened for mainstream capital. The war for legitimacy is over. The only question now is, are you positioned for the new world they're building?